What does it mean when India's largest IT services company announces its ambition to become the world's largest AI led tech firm, lays off 2% of its staff, and commits billions to build India's biggest AI data center? And all this in just one quarter. Welcome to Alpha Call. I'm Radhakrishnan Chonat from Alpha Street, and today we decode the Q2 results of Tata Consultancy Services. Just to understand their numbers, but to explore how AI, reinvention, and bold bets are reshaping one of India's most iconic company. TCS is a $27 billion global technology powerhouse with over 600,000 employees across 50 countries. Known for its deep client relationships, global delivery model, and consistent margins, TCS has traditionally been viewed as conservative but stable. But in the last 12 months, a clear narrative shift is underway. TCS is evolving from an outsourcing giant to an AI first transformation partner. It is reorganizing internally into smaller, agile business groups or SBUs, and it's investing in AI infrastructure, leadership, and upskilling at a scale never seen before in Indian IT. And this quarter was all about operational stability plus strategic reinvention. Let's first break down the key numbers. Revenue came in at 65,799 crores, up 2.4% year over year in INR terms and 3.7% quarter over quarter. Constant currency growth came in at 0.8% year over year, still subdued due to weak discretionary spending globally. EBIT margin came in at 25.2%, up 70 basis points year over year, driven by improved productivity and cost optimization. Net profit was 12,904 crores, up 8.4% year over year. If you look at the headcount declined by 19,755 on a net basis in the second quarter. The company announced plans to let go of about 2% of its workforce, equating to 12,000 employees, part of a planned rationalization. The company also announced a dividend of 11 rupees per share, the record date for which is 15th October 2025. TCS reported strong large deal momentums this quarter. The total contract value, or TCV, came in at $10.2 billion compared to $9.4 billion the previous quarter. The key takeaway here is despite macro pressures, TCS is maintaining margin discipline while doubling down on future bets. But the biggest story this quarter was TCS's bold vision to become the world's largest AI-led tech company. CEO Kritivasan said, "We are making significant investments in transforming ourselves. Our goal is to become the world's largest AI-led technology services company, enabling businesses, governments, and society." So, how are they doing that? 1. Internal AI transformation. Over 275,000 employees participated in TCS's internal AI hackathon, generating over 500,000 AI-based ideas. 2. TCS AI Cloud Platform, a unified framework to embed AI across all services, from advisory to implementation to governance. Third one, upskilling. Over 200,000 associates have completed foundational GenAI training. And fourth one, AI governance. TCS has launched dedicated AI policy frameworks for clients, especially in regulated industries. Now, this is a company trying to rebuild from the inside out, and that's rare for an IT bellwether. The other big one is the India data center bet, perhaps the most ambitious announcement this quarter. TCS will set up India's largest AI data center with a long-term target of 1 gigawatt. Now, let's put that in perspective. That's the size of a major thermal power plant, and the investment could exceed $6 to $7 billion over the next 5 to 7 years. And this will be built via a subsidiary offering co-location services to hyperscalers, AI startups, government, and Indian enterprises. Management confirmed that this would support India's sovereign AI ambitions with all data and compute staying onshore. Now, this could be a game changer, not just for TCS, but for India's positioning in the global AI infrastructure race. So, what were the challenges? TCS also made some tough calls this quarter. 2% of its workforce, that's more than 12,000 plus employees, were let go, mostly at mid to senior levels due to skill mismatches. The company is retraining junior associates, but admits that 1 to 2% more exits could happen this year. The total headcount stands at 5,93,313 and the LTM attrition is at 13.3%. Now, it's a sign that even TCS is not immune to the challenges of legacy to AI transition. Utilization improved and fresher hiring will resume in FY26. So the focus is shifting to productivity, reskilling, and project agility. Now, if you look at the client spending and demand signals that we could infer from the earnings call Q&A, here's what stood out. BFSI, still cautious but stable with mega deals like Trig Insurance. Retail and consumer goods had positive momentum, especially in the AI enhanced customer experience offerings. The discretionary tech spend remains muted, but green shoots are visible in select verticals. And geography wise, North America is flat, Europe is improving, India and emerging markets are doing well. Now, here TCS expects a gradual recovery over the next 2 to 3 quarters, with AI led engagements becoming central to client conversations. In closing, TCS's Q2 story is of operational steadiness and strategic ambition. It's not just about quarterly numbers, it's about how a legacy IT giant is repositioning itself for an AI dominated future. Whether it's massive data centers, internal AI first culture, or intelligence platform, TCS is laying foundations that could define its next decade. So, what do you think? Can TCS pull off this reinvention while preserving its margin and scale? Do let us know in the comments. I'm Radhakrishnan Chonat from Alpha Street, and this was your Alpha Call. And as a disclaimer, this episode is for information purposes only and does not constitute investment advice. Alpha Call and Alpha Street are not affiliated with or sponsored by the companies mentioned. Thank you. Until the next Alpha Call.